Welcome to today's event where we have the pleasure to present Gomspace. To help us through the presentation, CFO, interim CEO, Troels Dalsgaard. You will take us through this and try and answer all the questions we hopefully get from our audience. Today's event focus the Q4 report out this morning. Still some negative effect of order cancellation. I don't think there's any way of beating around that, but I think we will also try and take a little bit look at 23 and maybe the journey on your getting the better margins in and the standardization you have there, journey you are in. As always, down below, you'll see a box. You can ask questions there. Do it through the event. I will see if it fits in. Do it in English, Danish, German, Swedish. I'll try and translate to the best of my abilities, but our main language will be English. But for now, Troels, I think I will hand the presentation over to you.
Thank you, Michael. And thank you for hosting me here today. So my name is Troels Dalsgaard. I've been in Gomspace as the CFO since 2014, and recently we made some changes in our leadership where our chairman Jens Møde resigned, and then we have Jukka Pertola to step up as the chairman, and I am replacing Niels in an interim position as the CEO. And today, of course, we're bringing some focus on the numbers, being the CFO that has been in the company. So my presentation will start on just very shortly, what are Gomspace? Some of you may know, but what we do, we producing nanosatellites or satellites. So we are an engineering company that produce hardware, software, facilitating launching satellites into space. We have been doing that since 2007. We are the pioneer in this area, and we have already invested more than 900 million Swedish kroner since we were listed back in 2016 into developing our technology. So we have put a tremendous amount of resources into becoming the pioneer and the technology leader in this industry. But injecting a lot of money into this industry doesn't do it by itself. It also requires that you have track record. You need to have your hardware tested and prove, we call it fly heritage in space. And that's why we say we are participating in several missions. We have, if you calculate all our assets in space, we have more than 50 years of experience of how our satellites are working in space. More than 200 employees. Been growing for the last 7 years around in an average 25% a year. So focusing on the 2022, we reached a revenue about just above below 200 million, and we have a backlog of close to 400 million. But be aware, some of that backlog contains of third-party revenue, and when I say third-party revenue, it means it is our order, it is in our backlog, but some portion of that is something where sub-suppliers are delivering to Gomspace, and we forward that to the customer. So not so much engineering in that part of it. So just to give that as an example about the numbers. If we look into 2022, and especially within our fourth quarter, we didn't have any significant order intake. We defended a lot of our product sales in the quarter. The year also shows that we have, during the year, canceled some orders. And one of the orders we canceled was an ESA project, where we simply agreed that the amount of engineering content in that order, and if we look into Gomspace roadmap, wouldn't bring that technology that was relevant for Gomspace, and that's why we, in a mutual agreement with the order, canceled that 20 million order here in January. If we look at the revenue, not what we have expected, and we also saw some effects of this continuation of this major customer project we have suspended, that have led into a termination from the counterpart, and that's why we completely account for all the cancellation, which also impact our Q4 numbers. So the loss in Q4 was around 80 million. Bear in mind that if you look at that result, a lot of that is also impairment of assets. So if you look at the cash flow, it's more than half of that. So if you look at the cash flow from operation, it's minus 37 million, just below half of the net profit loss. So what I want to stress out here is that we already in December and also continued into January, we have taken those actions necessary to correct our numbers. And what we have done is that we unfortunately have been laying off close to 70 million employees to adjust for this for a new strategy and what we see in the horizon for 23. This also means that we will have a full year cost improvement of 60 million. Not all of that will have full impact in 23, and none of that have any impact in 2022.
So if I can ask a question, this cancellation with Isa, which came in January, are there other places in your order book where you might see the same? I know it makes good sense, but to get a feeling of, is there other places where you have a lot of engineering where it might not make sense to continue with that?
For now, as we speak, we don't have any concrete plan. It's something that I will focus much more on going forward. So that's also why you will actually see that not so many orders has been taken in the last couple of quarters. And that is due to we want to be a little more selective in what kind of risk we take in. So to answer your question, there's no concrete plan now. We always evaluate whether there's product that doesn't make sense for us and the customer. And if you have loss-making projects, sometimes the best solution is actually just to stop and to settle with the customer. But of course, that have to be negotiated case by case. But I don't have any concrete orders in my backlog as we speak, where I see this will most likely be cancelled. I don't have that. So
perfect.
So if I look a little into this year, 2023, but also just following up, we guided 22. So if you look at the column, the revenue outlook, where the column is 22, you see the revenue was around the 200 million. We made a revised guidance in Q3 where we said 190 to 250, as I remember, and we just being in the lower range of that. So we did know there was something here, there was some uncertainty on that customer. But we didn't expect this termination, this negative escalation of this major customer. And that also led to that they withdraw a guarantee that we, of course, are objecting or saying we disagree about that. But accounting-wise, this also led to even higher loss. So in totally, on this one customer, we have actually accrued a lost full year in 2022 of 75 million. So 2022 was challenging for us in a high degree. And that's also why we report this EBIT at the minus 117%, which is also worse than the guidance we came up with. The guidance was minus 90%, and we actually even didn't hit that, quite pessimistic, that view. So we know exactly what went wrong for 2022, and we have done what we believe is sufficient to correct those actions. When we look forward to 2022, we guide a revenue in the range of 250 to 290. So that is, of course, an increase to where we land 22. But what we want to underscore here, and that's new in our communication, is some of the revenue that we'll see going through Gomspace this year is third-party revenue, and that third-party revenue doesn't bring a lot of earning to the company. That's from sub-suppliers to some of those major projects. That's also explaining that we still guide a relatively negative EBIT. We are guiding a range of -25 to -15, because one thing is doing the actions that is necessary to correct and improve our financials, but it will take some time before they have the full effect. So we don't get the full effect of those actions in 23, but it's building up the foundation to 24 and 25, where we are much more optimistic about our earnings.
And then there's a question here, Troels. How much of the 2023 revenue is covered by the order book? You know, do you need to go out and grab some orders, or this guidance, is that kind of covered by the current order book you have on around 400 million?
Yeah. So we have an order book of 400 million, and I roughly split my activities into three. I have my product sales, so that's the subsystems. It's where we deliver hardware modules into products. We don't build the entire satellite, but we deliver them like over the counter. Back in 21, that represent 40 million in revenue. It decreased here in 22 to close to just above 60 million. And when we look into 23, we expect a similar growth. And typically in that growth, so let's say that's maybe representing 1/3 of our revenue for 23. That's something that gets replaced. It's like 3-month cycle. We sell that, but we see a strong trend, and we are pretty comfortable about that part of the revenue. Then we have the second part. That's where we do a lot of the engineering. So meaning we're using our resources. We have many of those orders, like we have a lot of product orders in our order book. We still have around, out of those 480 of those are on the commercial side. So we have pretty good order on those one. And then we have the scientific missions where we're delivering. In this case, we have several ESA projects, and we also have a good overview of that engineering we need to do and secure that. So also the second part is pretty well covered. And then we say, okay, there is some risk about this third-party revenue because it's our products, but it's really depending on when our sub-suppliers get some of their payload, some of their instrument that's going to put on board on our satellites that we deliver to the end customer. And that's always some uncertainty in that one. So we have it covered in our order book, but there can always be some uncertain. Will it deliver in this quarter, the next quarter? You know, if it's in Q4, would it slip into Q1? So that's always a risk. But when it comes to the order book, I'm pretty comfortable about our order book to deliver the revenue we're guiding this year.
And then there's a question about, is there not a third-party guarantee for customer orders, prepayments for customer orders, you know, to look at a little bit better liquidity, and that's one part of the question, you know, whether you could cover yourself a little bit better by third party covering that, and is this order totally out of your book, the cancellated order by this quarter, and is there some recovery? You know, can you recover some of what you have taken up? I guess a little bit upfront, taking all the cost out. Is there something you could recover? And the first part of the question is, of course, could you cover yourself a little bit by third-party guarantees on these orders?
Yeah, I think I'll maybe split it up in two, because when we talk about the third-party revenue, we're talking about Gomspace are delivering a full mission. In this case, it's typically European Space Agency. And then we are onboarding other payloads. So we come like with the bus, and then we fill up the seats with other payload instrument on board. So the money come from ESA to Gomspace, and we distribute them to them. And we have not that much margin on that. So there's not so much need for a guarantee. It's an institutional customer. There's more or less no credit risk on a customer like that. So that's maybe one of them, just to explain that setup. Mm. Then you had the other one, and what I think this question is referring to is this major customer product that we suspended that had been coming into a cancellation, and so I would expect people asking, the question is really like, how can you end up losing 75 million? Didn't you have any kind of guarantees? Why are you giving guarantees to other part? So good question. I really like that question, because this is where we really have to look into ourselves in Gomspace and really understand why did that happen? In my opinion, two things happen. When you're negotiating with a very strong customer, and you are a smaller company, they are very big, they also get some contractual advantage in their favor. So that will always be the case. And when things go bad with a customer, you'll always have a loss. So, but we should have lost 1/10 of that loss, not 75 million. If things go bad, you will always lose some money when you do special or bespoke engineering work. But what we were not able to do was to put down a foot fast enough. So you can say on the contractual management part, we were not good enough to realize this was going bad soon enough. So we simply let us drag along too far before we said, this is enough, we're going to stop it. And it's always a challenge to say, when do you stop? When don't you believe it anymore? When do you put your foot down? And we have simply not been good enough at that. One thing that we have learned is we have been having a kind of a reactive culture here in Gomspace. We haven't reacted fast enough. So what we need to do is we need to understand the risk in some of those very advanced products much better. We also need to look on the contractual framework with this customer. Could be breaking it down, it could be making the customer guarantee. But we have to remember, this is not because the customers don't have the money to pay. It's because they don't have the will to pay. So a guarantee wouldn't help anything if the customer disagree. In this case, then you have to go to the court system and go through all of that process. So we understand it. So what really needs to happen is us to be much more proactive, be much more reactive when we see this is going out of scope. Here's something, the contract, it doesn't work. We're not landing this. And then simply tell the customer this is enough and react much faster. So instead of waiting 5-6 months before it escalates to a very serious discussion, it should happen much faster. So that's what we have learned from that. And that's Gomspace has made several mistakes in our history. Sometimes we took great projects to a too unsecure customer. Now we took a huge project to a very robust customer. But so it's new mistakes. So we really need to take note of what have happened and make sure it doesn't happen again in the same way.
And maybe the last part, is there something to recover from this? It's maybe you don't want to talk about that.
Yeah, we are in discussion. Of course, we are. We cannot just accept a loss of 75 million and then do nothing about it. Of course. So of course there is the legal way. People that know have been in arbitration court and presenting, like if you have a big engineering project and improving that and go through the court system, that can be a quite long process to get that through. And accounting wise, I simply cannot defend that I will have something to recover. So that's why accounting wise, it's a full loss. It doesn't mean that we're not trying to find a solution with the customer. And we also think that we have provided a lot of technology here that is useful for this customer. But it's not something we have an agreement. It's not something that is concrete. So it's something we are trying to recover. But as we speak and as we report, we don't have any sufficient to say that will happen. So that's why we account it as a full loss.
Perfect. Yeah, but then let's take a little bit look into the future.
So what we just want to state here is this is showing what that market we're selling. So this is like a historic view on it. And 5 minutes before this presentation, they actually released the 2022 numbers. So here you can see in 21, there was close to 1,300 satellites launched in orbit. And when we look into 22, that amount has almost doubled to way above 2,500 satellites launched. So we see this clear trend in the past. So going here back from 2015 all the way here to 22, the number for satellites launched into space continue growing. If you look at this graph here, you see on the top, you have the larger satellites that they are from 100 mini and large medium. They are from 100 kilograms and up. What we are mostly in is in the nano, the smaller satellites. We're not all the way to the micro, but we are targeting that market. That's what you can see. So even though most of the satellites are in the mini satellite, there's still a significantly yearly growth in the segment that we are in. And that is basically what we are trying to sell our solution into. So just a little about 2022. We actually saw a doubling of amount of satellites launched into space in 2022. So if we look a little, where are Gomspace today and where do we want to go? We are a technology leader, but we are not making a plus on a margin. So, but none of the companies in this industry are making profit in the new space segment. So we are all investing into this market with the view that this market is going to grow, and when we get up in volume and scaling, the financial results will follow. So we are still investing. We had some situation here in 2022 that we just explained that also put our margin way lower. But even if we disregard those effects, we are still at minus 26 in EBIT margin. So we are not there yet. So let's take a look into why. So we drive technology, and that meaning we are able to grow on our top line, and we are able to deliver whatever the customer wants. But Gomspace have the capabilities to deliver more or less whatever technology the customer wants in this industry. We are really best in class when it comes to that part. But that doesn't mean that we have to, bid on and put our effort into all kind of engineering projects, no matter what risk you have. That's a management decision. That's where I have to take responsibility to say, yes, we can do this, but we don't want to do that. We don't want to put our resources into that. Because the problem is, as you see on the circle here, when we deliver a satellite, it's only 1/3 of that is reuse of technology or standard programs. The majority of our deliveries today are these non-recurrent engineering hours. So that means when you do a lot of new engineering, there will always be a lot of inherent risk in that part. And so that's what it's symbolizing. So you can see we can grow on the financial impact. We can grow this company. But you see on numbers how they fluctuate and up and down, and that's because there's so much risk in what we're doing. So our problem is today that we can do everything, and we've been bidding on too many things. We need to be much more selective in that and take responsibility to investigate the products that we are going into. But it also requires that we can increase our standard, our reuse of technology and platforms. And that is what we also have the commitment from European Investment Bank to, and some of our shareholders coming in, that Gomspace need to still invest in our platform, in our products. And that's what we're trying to show here. We are having a lot of products, but we need to have even more products fully well-defined so they fit straight into a few standard platforms. And then we can actually solve a lot of different applications, seeing a lot of different missions with the same models, a few different platforms, and we can deliver to many different customers on that. We believe if we can do that, we can go from 30% standard or reuse to 60%. And then lowering the amount of non-recurrent engineering. There will still be a lot of engineering, but we can lower dramatically from where we come from. And that can even out, that can improve our profitability, and it can also avoid some of those major fluctuation that we are seeing in our numbers right now. So if I go to the next slide, this is example. Yeah.
So there is a question here regarding can you comfort us investors that there's enough projects where you have a product market fit with your new strategy, right? There's enough money that you can win with the new strategy, where you don't are the technology leader, the competencies, the customers really want you to build something. I would use the word spaceship for them normally, but that's a little bit bad here. Yeah. And not only price, so the product market fit here, maybe asking you change strategy because you want to earn money, but is there also actually a market for that, or is the customer actually asking always for you to invent something new?
But that's okay. Yeah, can I there's one question about the market. Maybe we can take about the market projection as a little slide and see. We have been growing. We have a huge order backlog. We have said no to a lot of products, so we could have been growing more if we wanted to with the current product portfolio we have today. And remember, the products just raising, going from 40 to 60, and they're probably going to go much higher in 23. So we see that we can sell our products, and there's a demand for our products. We also believe the customers actually want something that is tested and proven in space. The reason that the customers are asking for very bespoke, high engineering contract orders today is because it's something that is not out of the box today. And we are here to create that out of the box product. So we see a demand, and I don't think we ever done any development in Gomspace without it's more or less being sold already before we started. So we know exactly what the customer want. We see all of the development products we do. We're not going to make complete new satellites. We are enhancing the satellites we already have. We are upgrading bigger power supplies, bigger solar, the antennas on the satellites, a more robust radio, making sure we can generate more power on board the satellite. So we know exactly what we want, and that's why we're seeing we can actually reach into those bigger satellites with some of the components that we have in a much more efficient way. And that's why we can see there's a huge demand for that. And you can say, there's some major trends in this, like, first of all, infrastructure. More and more needs to be connected. We all want to have access to data no matter where we are in the entire world. We sometimes forget that when we are I'm here in Aalborg, like everything is very well connected. That's not how the world looks like. Second, this Internet of Things, we want to know position on ships. We want to know position on aircraft. We want to know position on containers. We want live data. We don't want approximated data. We want actual data. That's a major trend too. We want to be able to observe the climate, the melting on the North Poles and so on. That's a major super trend that people want. And then third, all of this intelligence, like we have taken for granted that peace is something that just come without anything. We have now seen a world where even the most peaceful country needs to have intelligence of what's going on. We need awareness. And that is really what we're delivering also in Gomspace. Those intelligence solutions where you can monitor assets from the sky. So the major trends for just more and more solution could be solved with smaller satellites, we believe is clearly there. So we are not that afraid of that part, and that's where we actually have been selling a lot of our systems into. And that's also some of the customers we have announced earlier. They are into those industries, the radio intelligence, radio frequency intelligence.
So no more balloons on the size of a bus. Is that what we need to say? There's also a second part of this question. You haven't. There's been a little bit of far behind the order announcement. Maybe you touched a little bit upon it. Has that been a little bit of a choice from you? Is that what I'm hearing in your tone? And it might sound a little bit frugal, or what you say, or that it maybe is a choice, not something we should read too much into. The links that has been between the larger order, right?
Yeah, I think that's great. Just because we've taken in some very huge engineering projects in the past. You could also state it, but you're actually growing 50% on your product sales in your subsystem from 21 to 22. So a lot of sales is coming. But these are like smaller orders that we just announce them once in a quarter. You can see them like in the breakdown of our backlog, basically. And it is true. We are becoming more and more skeptical. It's also when you have a huge project, and let's be honest, we have some difficulty with this customer spending a lot of hours. So you don't want to put in more products at the same time. You have actually very difficult delivering on time on the product you're already taking in. So that's why we have been more selective in that way. And we are trying to manage that with our customers. And it's also about, we have some good customers. We have ongoing 30 customer products all the time. So we also need to serve all of the existing customers. If you see in our books, in our announcement, you see a lot of resale to existing customers. And that's because those customers are satisfied with what we're delivering to them. Would we like, some major announcement of the next big product? Yeah, of course we would. But not if it jeopardizes too much with the business. So that is answering your question. I'm sure more orders will come. Orders are difficult always to control what quarter they come in. We must admit that there has been at least here half year, 3 quarters where it's been quite silent from us. We've been quite muted. But underlying that, a lot of product sales has been sold in that period of time.
Perfect.
Yeah. So the solution is to increase our standard product, the reuse, and that's our solution. That's what we want to do, and that should also bring us, to a standard platform. And here we're actually giving an example of a microsatellite platform, a little bigger satellite, and we're just showing the same platform can be used for many different applications. And here we're just putting some example of signals intelligence, atmospheric monitoring, tracking of ships, planes, communication, and also this synaptic aperture radar, like where you use radio technology to make like a radar from a smaller satellite, looking to clouds. Basically, that's what you can do with that. So what does it mean? It means that we need to be able, and that's what we have planning, and we have a plan we're executing on halving our delivery time. Time to market needs to go from 12 to 6 months. The product content you saw, we need to double it up. So it's instead of being 30%, it needs to be 60%. And then we need to have this volume in our company to scale up. All of those 3 factors will contribute to our improvement of our earnings. So now just spend a little time to talk about the market potential. So I just announced there was more than 2,500 satellites launched just last year. So there are more than 7,000 satellites in orbit right now. And we still believe, and it doesn't really matter what source you look into, there's many different sources. There is this major trend, and it's probably going to be within 2030, more than 60,000. I'd say it's 59,000 satellites. If we dig in a little to some of the presentation, and there's a lot of details in this slide. What to the left, you will see how many satellites, if you look at it per how many frequencies, like licenses that have been planned, or when you have to launch a satellite, you need to make sure that you have a frequency to operate on. And here you can see that is 13,500 satellites. You can also look at another way, just looking at all the announced constellation. That's the image, the graphic you have to your right, and it's approximating more than around 24,000 satellites. Whatever the number is, it's huge. It's much more than we have today. And we believe that we can address a quite big part of that market, the mini and the microsatellite part of it. So if we look into what does that mean for Gomspace, if you look at the first one, that's amount of satellites, and if we go for the lower range of that, the 3,500, we believe we can take a big portion of that market. And if we just make some extrapolation about how much is a satellite, you can see on the lower part of this graph that if you just look at the hardware part of it, that accounts to somewhere around 4 billion within a foreseeable future. And as you saw as the slide, we're also saying at some point we will also go into the market for satellite infrastructure as a service. But this is not on the short time. This is when we have this product development program up and running. So that's why we are more focusing on the lower number. If you include that, it looks like we could address something like $10 billion in this foreseeable future. That's the entire market. So we have to look into a little, what is Gomspace? We're coming here where we have been, and those numbers you see on the screen here are in dollars. Most of this market is measured in dollars. That's why we're shifting here. And we are here around, just above the $20 million in deliveries in Gomspace. And we've been guiding next year to 50 to 90. But we still believe that if you just look into our part of the market, we can still grow significantly from where we come from. And an annual percent of growth of a much higher amount, of course, it gives absolutely higher numbers here. So that's actually why we're saying this is within our potential, at least a $700 million in US dollars in revenue potential within a foreseeable future, with the constellation, with the orders that we already know about. And of course, there will come more in that period of time. So then we'll just move on to try to wrap up a little, and you can be the judge whether this is clearing things up or it's just making everything complicated, but I'll give it a try at least. So we have a clear roadmap. We know where we're going. We have this strategy in 2030, and you need to think long in Gomspace, not focus too much on quarter by quarter, but you need to think a little long in this industry. So what we have seen is some of those business opportunities. Yes, it's sad. We are in a conflict with one of the really great potential orders we suspended, it was terminated, and now we consider it as cancelled. So that's the business opportunities. So right now we are looking into more IOD, as an in-orbit demonstration satellites, continuation of what we have done. The constellation will come, we're absolutely certain, but probably not here in 2023, and that's also what our guidance are reflecting. The strategy, we know exactly what we want to do. We have spent a lot of time on investigating the market potential, what kind of satellite, what kind of products we need to develop to harvest from this market. And that's why we have this product investment plan below. Right now, we are just finalizing the existing product backlog of the product we have done, and then we'll start enhancing the backlog and starting to building new products during the years. We are just taking a little dip on the investment level, like we're just reducing slightly here just to get on top of things again after this 2022. We know also when we have to go into more constellation, when we have to build many satellites, we have the roadmap, we know what kind of microsatellite will do it, but it's not now. And the same comes from the space infrastructure as a service. That's where we have this much more robust satellite that we can start having insured and selling it to company, more like the leasing model, but without taking the risk ourselves. That's something we're looking into, but it's not something that's going to happen on the short run. We're focusing on our current opportunities, we're focusing on our backlog, converting it, and we're focusing on this enhancement and new product development program so we can move up, as we said before. We established ourselves in France early 2022. We don't have any plans to expand our margin. Some of you will maybe remember that we actually have Spain on the map earlier. we don't see any need for that here on the shorter time in 2023. On the financing part, around this a little later in March last year, we got in a new major investor, Hargreaves. Today he's representing around 20%. He believes in this strategy, what we're doing. He has also committed to injecting new capital in the rights issue with the bridge loan. He's part of that. We did here in November. We also have European Investment Bank been looking at us, validating our plans, and have being able to offer us a credit facility of close to 200 million. So we have important stakeholders committing, saying that they are willing to invest in this strategy that we are presenting, and they also have committed to that patience. It requires us to bridge us there. As you all know, for those who don't, we are in a process also to do a rights issue, because we want to give all the shareholders the possibility to be part of this journey, and we are fully aware of the development in our share price, and that we took in an investor on a much higher valuation in the beginning of 2022, Hargreaves. But now we also want to make sure that all investors are participating in that. That rights issue, we've ranged it. It's 100 to 125 million Swedish. 50 million of those are already subscribed through this bridge loan from the majority of the investors and the management team, board of directors. So we of course want to go out here in the first quarter and executing that rights issue. The terms and condition will be announced within this month, most likely.
Perfect. So there was a question here about the rights issue. So was that expected? You still expect to complete that in the first half year of 23?
Yes, we still expect to do that.
And then there's if the coming capital raise will not be a success, do you have a plan B?
We always have a plan B and a C and a D, but we have already taken action, so we make sure that actually with the funds that we have in reach and also on a much lower level, we still have a plan to execute it. But of course, we are confident that we will be able to raise the capital that we want to raise. But yes, if we are not successful on the capital raise, we also have a plan how we can, we already know the 50 of the million are already paid in, so they're just going to convert it into shares. So it will be partial successful as minimum.
Perfect. I don't know, should we jump to some questions, Troels? I know you could probably spend 2.5 hours and have done that with your board and your C-level management team. I'm sure we will hear more about it also during the capital raise. So let me see. There's a question here. When do you project positive cash flow? That's a very direct question, and I don't know whether you're willing before the capital raise to give too much details into the future, but I will ask it.
Yeah, you can say what I have answered today is it's not going to be this year. But we are also now taking in loans. So I cannot say you a straight number, it's going to be this quarter and this year. That will be premature. We believe it will happen within a couple of years, and that's what we're trying. And that's why we have this backlog. We will convert it in. I actually believe if I avoided some of those major losses we have done, we would actually be close to the break even already now. But we still have some commitments we need to finalize. And then we need to make sure that what we sell in the future also brings us in that direction. But I'll also say, if you're talking about free cash flow, of course, when we have this kind of investment level, then the free cash will not be positive within a couple of years. I'm talking about cash flow from operations.
Okay.
Yeah.
And then there's a question also. You are interim CEO. There have been some management changes. How well is this consolidated? Will there be a different strategy? in a half a year than what you are presenting today? It's a challenging question, I know it, but I think it's a good one, right? How well has this been, consolidated by all management and saying this is the direction we want to go? Board, this is, not just because there's been a lot of changes short term, but also, a deep rooted with your big shareholder coming in and some stuff.
This has been more than a 2-year process where we have spending a lot of time investigating, finding the facts, doing deep study on the market where we should go, and that actually led to we have this investor going on board in March last year. So that strategy is really cemented in the major investors. So the two biggest investors in Gomspace, close to 30%, are fully committed to this plan, and both of them are being represented in the board and are also represented in the. They're not planning not to be in the board at least. So they are still there.
What would be a realistic level of operating margins for Gomspace longer term? It might be hard. I want your viewpoint on that, because if you say none has really shown it yet, so we don't have something to set ourselves for, and when will such margin levels likely be reached?
Yeah, what we're guiding is saying if you keep being an engineering in our industry, if you have the majority of what you deliver is engineering, non-recurrent engineering, you'll be at those low one-digit margin, EBIT margin, 5% or something like that. If you can, we need to go up and have much more standard content. That's where we make our money. That's on the product and the reuse, and we believe when we are reaching that with this product investment program, we'll reach around the 15%. That's what we're targeting. If we come from that part, and add on the service business on top of it, the satellite infrastructure and the service, it's significantly higher. But that's way too preliminary to talk about. But that's probably doubling up again if you look into this industry. So as it is now, if you look at some of our peers, they are also ranging from EBIT minus 150 to minus 30, 40% if you look at some of our peers right now. So this industry, the newspace industry, as we are right now, are all loss-making companies, because we all are investing significantly into the future.
Perfect. And Troels, I think I will, a lot of questions, we are over the time, unfortunately, but I will leave with you this one. I'm in losses and would like to know the future prospects. So I will give you half a minute, maybe a minute, to try and say, I know you don't control the share price, but you control the results. So take it away, what you will try and make sure that the future prospect is good.
Okay, so first of all, this is really about how we run our business. We would be in profit within a foreseeable future if we avoid our major losses. To avoid our major losses, we need to be more on top of things. We need to be much more on top on where the products are going. If products are going in the wrong directions, we need to be much more proactive and put our foot down and mitigate those risks before they become too bad. And then we simply have to continue doing what goes really good. That's the subsystem, that's the system, that's the reuse we sell into some of our customers. The Unseen Lab customers is a good example. We are launching here soon to Colombian Air Force. We have several customers that have been buying the same bespoke satellite from us on a continuous basis, and we do make money on those products. But what we lost in those big mistakes can simply not compensate that. So avoiding those big mistakes, continue doing what we see works, and then bringing up the product level to a higher level, so we can have a much more robust and a higher portion of our revenue making a profit. That's what we have to do. When we show that, and that becomes visible in our numbers, our order book, and so on, I'm absolutely sure that the market will also accommodate that valuation of us. But as I see it, there is a loss now, and I need to accept that is because we have not performed and that's why the market is also valuating at this level. So I fully recognize that. The only thing I control is that to make sure that we execute on our strategy here.
Perfect. And there's an asking here that to have more open communication with the smaller shareholders. It's not anybody from HC Andersen who has written that, I think so. But I will try and make sure, and I guess we will see you on such event where we also can ask questions when you will present a little bit more about the future during your capital raise. So thank you, Troels, and thank you to all the viewers asking in. I think it gave a very good, you might say. I think we got through a lot of the questions that has been hanging around in your share. So thank you to everybody for that, and thank you, Troels.
Thank you.